The Securities and Exchange Commission voting to approve a new rule that would call for brokers to act in the best interest of their clients when advising them on investments. The decision coming 1 year after regulators first proposed those changes. Joining us right now is the Squawk newsmaker of the hour, SEC Chairman Jay Clayton. We're thrilled to have you here this morning.
Thanks, Andrew.
Tell us about this new rule, what you think it means, and we'll get into some of the debate about it.
So, look, there's a lot in this new rule package. It's thousands of pages, but let me summarize the three key things. The first is we're raising the standard of conduct for broker-dealers, the obligations that they owe to their clients. The second thing is we're covering more of the advice spectrum. And one of the things we're covering that's key is account type. When you're rolling over your 401k into a different type of account, that advice is now covered by our standards of conduct, whether you're a broker-dealer or an investment advisor.
And so before this, there was no standard?
You know what? It wasn't clear enough. Okay. It wasn't clear enough that when someone was telling you, hey, you've got a lot of money in your 401k, you've saved it for 30 years, this is what you should do with it. It wasn't clear that that advice, whether you go into a brokerage account, an investment advisory account, was covered by our standards of conduct. That's one of the most critical decisions an investor makes, and that needs to be covered. And then the third thing that's important is we're making it so that if you're a broker-dealer or an investment advisor, you've got to tell people how you make your money.
Very quickly, the ECB leaving rates unchanged. That's what we'd been anticipating, but just to get it out there, ECB leaving rates unchanged. We will hear more from Mario Draghi a little later, and we'll be updating you with that as well.
So just to get back to this point, and this is the thing that I've never understood. What is the difference between working in my best interests and the fiduciary rule, or in my to have a fiduciary duty to me?
Okay, let's talk about what a fiduciary duty is. Now, there are all types of fiduciary duties, but I'm going to talk about the investment advisor fiduciary duty. It's a combination of care and loyalty. You owe somebody a duty of care, and you can't put your interests ahead of their interests. Best interest on the broker side has many of the same elements. But we want people to understand that the investment advisor space and the broker-dealer space are different. They're very different in the way people get paid. In the broker-dealer space, you get paid usually a commission on a transaction-by-transaction basis.
Right.
In the investment advisor space, it's more of a long-term relationship where you get paid, on a quarterly fee, you pay a quarterly fee, you pay a yearly fee, and the advisor has I would say, a more portfolio lifetime relationship with you. Those are two very different relationships, and we want to be clear. Yeah,
can I ask
sure,
you a question on behalf of the advisory industry? I'm a participant in financial services. The number one growing cost we have is compliance. There's nothing that's inflating faster than the cost of complying. And I'm not whining, not to the chairman. I'm just asking.
You can whine.
Okay. Oh, let me whine then.
Okay.
So you talk about 1,000 new pages. That's going to cost me a lot of lawyers to go read that and figure that out and then actually put it into play and maintain it to stay compliant. I have to stay compliant. I want to stay compliant. Yeah. Are you stifling innovation a little bit in the broker-dealer space by making it so expensive to just stay alive?
No. Look, I think what investors need to know is how much of their money is going to work for them. And the key part of this rule package is whether you're an investment advisor or a broker-dealer, you're going to have to be very candid with them how you're making your money. And look, you do a good job managing money, you should get paid. But your investors should know. We
agree on transparency. It's how you maintain that transparency and the cost of doing so. Because our cry, if we're going to whine, is tell us what we have to do, but make it easier for us to do it.
And we're trying to do that. We're saying, put it on 2 pages. If you're both an investment advisor and broker-dealer, put it on less than 4 pages. Tell people how you make their money. Tell them what your conflicts are, and they can make good choices. Look, you know what's happened in this industry? The power of competition has inured to the benefit of investors so much. I mean, when we all started in this business, the drag for a retail investor was 2-3% a year. If you invest your money in index funds these days, we're talking 10 bips. I mean, people are putting an extra 2.5% in their pocket every year. That kind of competition.
But it's forced consolidation. You can't start a small business anymore.
But Kevin, on the other side of this, and Chairman, I want to ask you about this. There are people who think that this rule does not go far enough. I mean, that's the flip side of this. This is Rick Fleming, the SEC's investor advocate, who says, I anticipate the same confusion will exist a decade from now. The commission had an opportunity to help investors by brightening the lines between investment advisors and broker-dealers, but instead the commission has formalized its long-standing acquiescence to the preferences of the brokerage industry. Tough stuff.
Tough stuff.
Well, you have to serve both markets, I guess. You have to listen to that criticism, then you got a guy like me whining about cost. But I get it.
Look, if you don't like criticism, you don't take this job.
I get it.